All right, so you curious on what's happening this summer in the Phoenix market? Let me tell you a little bit about what's going on. Since the end of January, the average sales price has now risen from $264 to $287 a square foot, meaning prices have appreciated 9% just in the last 5 months. It's a pretty big disappointment to some of those who are still calling for, the great housing crash of 2023. But our ongoing inability to provide new listings has led to a steady decline in overall supply. In fact, we're losing 150 listings per week. That's a slower rate of decline compared to previous months, but it's not because more sellers, decided to get off the fence and list their homes. The slower decline is in response to just demand weakening. Mortgage rates have gone from like 6.5% to 7.1% within 2 weeks last month. So after experiencing, a glimmer of hope and optimism in April regarding the stabilization, and decline of mortgage rates, housing economists were disappointed yet again as less favorable inflation reports led to a sudden surge in rates. This ongoing volatility just makes it super challenging to predict what is going to happen with mortgage rates in the present times. Another thing we're seeing is rental listings have noticeably risen. I'm not surprised we're seeing this due to a majority of current homeowners, just opting to rent their property in lieu of selling because they've got super low interest rates and, maybe they can make a little bit of cash renting it out. And as of this month, we had like 12,000 homes for sale and over 6,600 rentals on the market. So that means like for every home available for rent, there are not even 2 for sale. And this downturn in demand has created an advantage for FHA buyers, who over the last couple of years have mostly just been rejected in lieu of investor offers, but they've been able to come back into the game because investors have kind of put their buying on hold and they are getting into homes at a rate that they haven't in the last couple of years. In fact, last year at this time, I think they represented around 9% of all closings, and this year they're at 22%. So FHA is almost a quarter of all closings. And, every city is like officially in a seller's market. The only city remaining in a buyer's market is Casa Grande. When markets soften like they did last year, cities on the outskirts do tend to fall into buyer's market first and are the last one to come out. Whereas cities like on the interior, like Phoenix, Scottsdale, are the last one to go into the buyer's market and the first one to come out. So in improving market conditions, only slightly relieves sellers. They are still having to come to the table with some sort of contributions. In June, over 50% of sales involved a seller concession of at least $7,500. It's down, from where it was, but make no mistake, sellers are still relying on providing some buyers some assistance to get into a home and, make that mortgage payment kind of comparable to what they would be, if they were to just go rent a home. So, it's been kind of a crazy year, still is. If you have any questions about what the market is doing, maybe in your specific area, or if you want to talk about, is this a good time to get into a home, or should we rent? We're always here to answer any questions. Thanks for watching.